Assalamu alaikum everybody, Said Ahmed back again with another YouTube video, guys. Today's YouTube video, part 4 of the day trading course, I think. We'll be going over support and resistance and liquidity levels. The reason why I'm merging them together, guys, is because the overall general concept of them is the same. Every SMC, ICT trader is going to start like berating me in the comment section, guys. I don't care. It's the same thing. That being said, guys, let's get into the video. I'm going to start right away. I'm actually day trading right now. Also, so I have my charts like for day trading right next to me. So I'll be day trading while filming the trading course. All right. Also, guys, if you do like the video, comment down below, subscribe to the channel. So support and resistance. So let's actually hide this for a second. How do I hide? There it is. Okay, cool. So we're going to have two things, right? We're going to have this area over here, and we're going to have this area over here. Now, this and this are the same things, but they're inverses of each other. Okay, this one is going to be called resistance. And then this one is going to be called support. Now, here's what you expect price to be doing, guys. You expect price to be going up and down or sideways. There's really only three things price does, right? And in reality, guys, there's only two things, but sometimes it's a little bit harder to identify either if price is going up or down. So we call that consolidation, right? But what you expect price to do, guys, is either go from here to here to here to here, right? That's what it does in consolidation. Now we're only talking about consolidation for now, guys, but you can apply this to trending markets as well, right? Now, you've probably seen price do this at one point or another, right? This is why it's called support and resistance. It's because price is going to bounce between these two. So when price gets to this point right over here, right, it's going to act as support. What does support do? Think about the actual word, right? Support pushes something up, right? It holds something up, right? So if price comes down here, well, a support lever is going to hold price at that level and try to support it going up. What does it do? It continues to go up from there. That's why a lever is called support. Now let's go to resistance. Why is a lever called resistance? Because it resists, right? So if you're resisting something, you're pushing it away, right? You're trying your hardest for it to not get through you, right? That's why it's called resistance. So if price comes at a level of resistance, it's going to get pushed in the opposite direction. So what does price do? Comes to the opposite direction. Very simple support and resistance. It's literally that simple. A lot of people make it very complicated, guys. But like, oh, well, the price has to do this. No, just think about what's happening to price when price reaches a certain level. Okay, is it getting pushed up or is it getting pushed down? It's getting pushed up, it's support. If it's getting pushed down, it's called resistance. Now, this is in consolidation, guys. When it comes to trending markets, right, you will have support and resistance flips, right? SNR flips. Now, why is it called that? Well, let's say you have an area of support, right? So let's say this is your area of support. Actually, yeah, okay, cool. So let's say this is your area of support. Let me delete pretty much everything that I did right now. Okay, oops, I did not mean to do all of that. Forget about these indicators, guys. I was just playing around for fun. Okay, going back, sorry about this. Let's hide. Okay, so we have support right over here, right? And so what do we expect price to be doing again, guys? We expect price to come to this level and get support, right? We expect price to push off from it. Now, in a trending market, if price is on a downtrend, right, what's going to end up happening? Well, sometimes support isn't always going to be support, right? Sometimes support is going to be broken through, okay? So in the times when price has broken through support and it comes back and then it continues going down, well, what just ended up happening? We had price come to a level and we had price push it up. So this is a level of support. We have price come through that lever now, right? So it's broken this level. It was a support lever, it's broken. Now what ends up happening? Price comes through it, but now when price reaches that level again, that level is pushing price down. So this was a level of support. And now since price comes back to it and is now getting pushed down from it, it becomes a resistance. Okay? Support becomes resistance. Support and resistance flips, right? You'll see this a lot in a downtrend. The reason why I'm like really not going a lot into detail with like these drawings is because when I show you it on the chart, it's going to make so much more sense. So it's really no point in, it's not really going to help you with these drawings as much as it will when you actually see the charts, because I'll literally show you clear-cut examples of this happening, right? Now, the exact opposite happened. In an uptrend, you have levels of resistance. So price is going to get to a level and it's going to get hot and then it's going to get pushed down from it. And again, if price is getting pushed down from a level, it's called resistance. But what ends up happening? Price breaks through that level. What happens when price breaks through that level? It comes back to that level and then price goes up from that level. Now look, again, guys, we had a lever, price pushed down. That's resistance. We have a level, that same level, price goes through, comes back, and gets pushed up from that level. So since we're now pushing up, the level has now become a support level. Resistance turned support. Okay, so in an uptrend, there's going to be areas of support or areas of resistance that turn into support. In a downtrend, there's going to be areas of support that turn into resistance. All right, and again, it'll make much more sense when we actually get to the chart. So going back to it, guys, there's always going to be two levels. It's either going to be support, or it's either, well, this is going to be resistance, or it's either going to be support. Only two levers. Okay, that's it. No super complicated, this, that, and that. Support or resistance. That is it. And how do you identify them? Is price getting pushed up from a level, or is price getting pushed down? Price gets pushed down is resistance. Price gets pushed up, it's support. Very, very simple stuff. So now let's actually get into, and we'll get into liquidity, guys, in the later half of this video. Now let's get into the charts, right? So what do you see over here, guys? Let's take an area of consolidation first. Although Tesla tends to not consolidate that often, but whatever. So what do you see over here, right? You see this level, and again, guys, support and resistance. One thing before I get started, it's not a line on the charts, so don't ever think it's something like this. No, some people might draw it like that, and that's fine, but it's always a zone, right? So what do you have over here? You have a resistance level zone, right? Why do you think that's a resistance, right? It's pretty easy. Price comes up to this level and gets pushed down, comes up to this level and get pushed down, comes up to this level, and guess what ends up happening? You guessed it right, it pushes down. Very simple, very easy to understand, right? So now if you notice that price is getting pushed down once and price is getting pushed down another time, when price gets to it a third time, don't you think that a similar reaction might happen? This should be sending out alarm bells in your head, like, hey, price keeps on going to this level. Maybe I should start looking to short because price keeps on reacting from this level and getting pushed down. Maybe it's a good opportunity to see if a short is available, because guess what? There's a very high likelihood that it's going to play out. And this actually happens again. Now you'll notice, guys, that the level I drew doesn't encompass this point right over here as well, right? You'll notice that this point over here is not encompassed in this resistance level. So you might say to yourself, like, hey, where this resistance, this isn't technically touching resistance and it went down anyways. Guys, there are multiple ways to draw a support and resistance, okay? You guys might have drawn your support and resistance like this. Okay, you guys might have drawn your support and resistance like this. It's okay to draw it. What you have to understand, guys, is that it's not a price point, okay? It is an area, it is a zone. That is what support and resistance is, okay? And it's just an area where price is most likely to come back to, and an area where price is supposed to have a probable reaction. That reaction is dependent on what price is doing. Price continues going down, this becomes a resistance zone. So if price comes back to this area, there's a very strong chance that price is going to get pushed down again. You see it happen 3 times, you see it happen 4 times. Okay, very, very simple. Let's find an area of support. Okay, this is a good area actually, shockingly. So what do you have over here, guys? Right? Again, you have this minor push up, minor push down, and a strong move up from that, right? Now guess what ends up happening? Price returns to here, and what do you have? Another push up. So if price comes back to this level again, what do you think is going to happen? Chances are it'll continue going up. And that's exactly what ends up happening. Now again, what is this? Is this support or is this a resistance? I'll give you 3 seconds to write it down. 3, 2, 1. I hope you guys were quick typers in the comment section, but it's support, right? But price comes to this level and pushes back up. Comes back to this level, price is reaching a level, and that level is supporting price. It's pushing price up from that level. Comes back up. Reaches that level again and comes back up and gets into a massive uptrend. Now, guys, obviously this is hindsight, okay? At the time, you're not going to know if price is pushing up from this level or not. But if you've seen it happen once and twice before, and potentially you can call this a third time, it's most likely going to happen the 4th time as well. Not always, right? You need to couple this. You need to add different confluences, whether it be the trend, whether it be this, that, and that. You have to add things other than just support and resistance, because if you start placing longs at every support and shorting off every resistance, you're not going to make money, right? For instance, this is a level of resistance, but guess what ends up happening? We literally never come back to it, right? Or we never have a short position from here, right? So we literally come to this level of resistance and we don't go down from here. This is going to happen. I'm not here to, feed you BS and give you 100% probability strategies. No, it's never going to work like that, right? We have this level of resistance, right? Why is it a level of resistance? Price is a sharp downward move from here. This is a level that price reaches and price pushes down. But what happens when we go back to this level again? We don't get any resistance. We just push through it. So this is no longer resistance. So you shouldn't be shorting at every single resistance, and you shouldn't be longing at every single support. Now, this goes into actually another thing that I've told you guys before. Resistance turns support, support and resistance. In an uptrend, right? And I don't think anybody's going to debate me on this. We are in an uptrend, point blank period, right? In an uptrend, what ends up happening is, like I said before in the beginning of the video, resistance turns to support. You have an area in the market where price has tapped into, right, and has a very strong push to the downside. That's resistance. Now, when price comes back to this area, we break through this level. Okay, so now it's no longer resistance. We've broken through a level of resistance. There's no resistance happening. Okay, it's no longer resistance. So what ends up happening though? We tap into this level and we go up. This is now support. So now when we tap in again, who knows? Maybe we go up again. And yeah, we do, right? So you see, we tap in, we go up, we tap in, we go up. Now, this wasn't the cleanest move, guys. So you probably would have gotten stopped out from here. Or even if you did not get stopped out, you would have gotten took out at break even, just to be completely honest with you guys. But again, support turned resistance, resistance turned support. Resistance, bam, taps back into it, support, now turned, and we have a strong move up. And if you want to catch a second move, you probably would have gotten stopped out. When resistance turns support, guys, you should not be trying to target the second move. You want to target the first move. The first move will always be the most explosive. Okay, so you notice the first move was right over here. When we tapped into this previous resistance level, it would turn support. And why do we know it's turned support? Because the overall trend is an uptrend. So we know it's going to go to the upside, right? And then we just have that explosive move. There's another area right over here, right? So we have resistance right over here, right, guys? Why? Price has an area that price is trying to push down from. Okay, it's no longer resistance because right over here, we pushed up from it, right? And we've broken that resistance level. So it's no longer resistance. Price comes back to it and price starts going up from here. This is now a level of support. And what do you see happen? We just have a massive explosion to the upside. All right. Now, you guys might be wondering, great, Syed, resistance, go down, support, go up, support and resistance flips. How the heck do I identify them before it actually happens? And it's very simple. Zoom out on the charts, right? Just zoom out. You don't want to zoom out too much, guys, right? But for the purpose of this video, I'm going to zoom out. Where do you see prices having a reaction from? That's the question you should be asking yourself. Where is price having a reaction from? Is it having a reaction from this area over here? No, it's not. The price has done nothing over here, right? Is it having a reaction from this area over here? Yes, that's the exact area that price is having a reaction from. What happens over here? This is the area of support, right? Price has a massive run up from here. Price comes down. Price comes back into it. Massive run down. Comes back into it. Massive run down. Comes up from here. Comes into it. Run up. So we have runs up. It's support, right? Breaks through, turns it into resistance, right? Bam, comes back in, resistance. Bam, breaks through again. Resistance has now turned to support. Comes back in, bam, run up. Comes back in, run up. Very slight run up. And now we're actually back at this support level. Would I start taking a buy position here? No, because I have nothing telling me it's still going to go to the upside. But we're at a support level nonetheless, right? Now, there's only two things that's going to happen from here, guys. Either A, we continue going up from here, or B, we continue going down from here, and this level has now become resistance. Very, very simple. So when you're trying to identify your support and resistance levels, guys, you just have to figure out where has price had a reaction from. It's very simple. And look, there's another area very simple to this. A very smaller area, right? Look right over here. Now you might be wondering, Syed, is this an actual area of support and resistance? Yes, right? Let's delete this one for a second. Let's go over here, right? Price comes to this level, has a small move, breaks through that level, breaks through the level again, comes back in, has a move to the upside, comes back in, has a move to the upside. This is an area of support. Now you notice, guys, price isn't always going to reach areas of support and resistance, right? Sometimes it'll come back a little bit and not actually touch them, right? So it's okay. That's also going to happen. There are a lot of scenarios. Everything in trading, guys, whether it's support and resistance, whether it's indicators, whether it's candlestick patterns like I told you about last video, every single thing is just probabilities. And sometimes the probability doesn't play out. Sometimes the probability never shows up. This is one of those areas, guys, where it became support. So if you saw and had properly identified that it had become support and you wanted price to come back here, it never does. So if you were waiting to take a buy position from here, well, it never did. But that's okay, because another level was made right over here. And you could have took a buy position from here and made money. right? And that's not to say that if price comes back here, it's not going, like, price will never come back here. Maybe it does come back here, and then you can take a buy position from here, right? So again, very, very easy way to identify support and resistance, guys, is where has price reacted from strongly. And when you see where price has reacted from strongly, then you just wait for price to come back to that level, right? It's very simple. Look, you look at this level right over here. Would you consider this a resistance level? Yeah, I would, because price has had very strong downward movements from here. All right, look at this, right? Price comes in here, downward move. Price comes here, breaks through, but still it was a false breakthrough. We had a breakthrough, this didn't turn support, downward move. Comes back here, downward move. Comes back here, downward move. Comes back here, downward move. You get the point. So there's a very high chance, guys, that when price comes back here, goes up a little bit, we might get another downward move. So maybe when price comes back here, you should be looking for shorts. And again, this hasn't happened in real time yet, right? So this is how I would identify. This is a strong resistance level. This is a level that if I was trading Tesla fund and I saw price come back to this level, I would be looking for shorts. Now, look, guys, you might watch this video a year later, and a year later, price maybe has come through this video, come through the zone, and it did nothing. It continued to go to the upside, right? And you'd probably be saying to me, well, Syed, that level of resistance never panned out. And again, not every single level of resistance is going to give you a shorting opportunity. You have to add it with other things. Okay, and those other things, guys, you might be wondering what those are. I'm going to talk about that in a later video, in this course. I can't pack everything into one video, unfortunately, guys, because then it's going to be too long. So I'll give you all the secret sauce, all right? But it's going to take some time to get to that point. Also, if I just gave you everything right away, you'd get confused and you'd have no idea what you're doing, and then you call trading a scam, and you call me a scammer as well. Okay, so you can't just short at every resistance. You can't buy at every support, but they give you very, very strong probabilities that price is going to do one of two things. It's either going to react to the key level exactly how you thought, or it's going to break through and become the opposite. So it's either going to go from support turns into support again, and it stays support, or support turns into resistance, and the opposite. Gives you very, very good probabilities of what most likely will end up happening, right? And you can position yourself based on that. You can position yourself to know that, hey, price comes here, I should be looking for buys. Price comes here, I should be looking for shorts. Okay, very simple. Now let's get into liquidity. Sheesh, I feel like I've been talking for a while. I'm going to use forex for this, guys. It's very simple. All right, guys. So this is an SMC ICT sort of concept. All right. So liquidity, guys. Let's hide this chart again. So liquidity, guys, is just going to be areas, right, like that, where price has stops. All right. Where exactly are you going to place your stop losses? All right. If you're in a downtrend and price is over here, and you're looking to get short right over here, right? And now you see bearish momentum, where are you going to put your stops? Probably at these highs, or maybe a little bit higher, right? So this is where all the liquidity is going to reside. Liquidity is pretty much where price has a key level in the market, like support and resistance, and where people are going to put their stop losses based on that support and resistance level. That's the easiest way to explain it. When we go to the charts, it'll make more sense, right? So if you're taking a short position from here, guys, let's say we are at the support, turns into resistance, you see bearish momentum, you want to take a short from here. Where will you put your stop loss? You're not going to put it over here. You're not going to put it over here. You're most likely going to put it above this level. Why? What's the theory behind this, right? The theory is that if price breaks this level of resistance, where price isn't going to go to the downside anymore. So if price breaks this level of resistance, I don't want to be short, because price, chances are, is going to continue to the upside, right? Resistance pushes price down. So if resistance is broken, now there's nothing pushing price down anymore. So you don't want to be in shorts. This area where stops are is going to be your area of liquidity. Now, people that are trading SMC ICT concepts, what they're expecting to happen is they're expecting price to take out everybody's stop. So they're expecting price to go up from here, right? Take everybody out of the market, gather liquidity, and then go to the original move. Now, whether or not you believe in this is up to you, guys, but that's what they expect to happen. And at the end of the day, guys, it works. It's as simple as that. I'm not going to hate on it. It works. I don't believe in the methodology behind it, but it does work. Now, once you've had this actual move and you've stopped out the real people, the SMC ICT people, they're looking to get into this move now. They're looking, oops, I forgot about this. They're looking to get short from here, and they're looking to take it to the other level of liquidity, which is going to be over here, right? Because if you're taking a long position from over here at this area of support, right? Bam, where is your stop loss going to be? It's not going to be here. It's not going to be here either. It's going to be right below the level of support, because if support is broken, price is most likely going to go to the downside. So you put your stop loss over here. This is where liquidity is residing, and liquidity is took out. And now these SMC ICT guys are looking to take price up. Very simple. Again, guys, support, resistance, liquidity, yada yada yada. At the end of the day, guys, it's pretty much the same thing. People are gonna hate on me for this, but it literally is just a very key difference in this, and we'll get into exactly how to identify liquidity. So the easiest way to identify liquidity, guys, is going to be pretty much the highs and lows of key structure points. Okay, because think about it like this, like we mentioned before, right? If you're taking a short from here, where's your stop loss going to be? It's going to be over here, most likely, right? Because this is a very strong level of resistance. Now, here's the thing, guys. If you're taking a short from here, right? That's a very easy way to identify your stops. But if you're taking a short from here, what's the safest place for your stop loss to be? Over here, right? It's not the best risk to reward ratio, but it's going to give you the safest area. If you're taking a short from here, where is your stop loss going to be? The safest area is over here. You get what I'm saying? So your safest area to put your stop loss will always be at these highs. So knowing that, where is all the liquidity residing? Oops. Where's all the liquidity residing? At these highs over here. So liquidity is going to be at this level right over here. Now, you can say the same thing again right over here, right? If you're taking buy positions, this is an area of liquidity. Why? If you're taking a buy position over here, where's your stop loss going to be? Right over here. You take a buy position over here. What's the safest area to put your stop loss? Over here. You take a buy position over here. What's the safest area to put your stop loss? Over here. So all of the major players are going to put their stop losses around here. That's the methodology, okay? I don't necessarily agree with it, but all the major areas are going, major players are going to put the stop loss right over here because it's the safest area. It's where prices had the strongest reaction from, right? The strongest reaction to the upside. You have to understand, guys, is that this right over here hasn't happened yet, okay? So when you're placing your stop losses, when you're placing your take profits, etc., like I'm just putting them like this randomly, right? And I don't really care, but because this is just an example, but this entire thing hasn't happened yet. So when you're looking to actually take a trade, and in reality, if you're taking these trades, it'd be over here, right? Let's go one by one actually in these positions. If you take a buy position over here, you don't know what's going to end up happening. You just know that the safest area to put your stop loss is below the support level. Okay, and again, let's continue going forward for a second. If you take another buy position over here, right? You don't know that price is going to continue to the upside. You just know that the safest area to put your stop loss is down here because prices had a decent move from here. Continuing, let's continue. Let's say you take another position over here, or someone else takes another position. It doesn't have to be you. You don't know that price is going to continue to the upside. You just know that price is at a strong move from here, and it's at a strong move from here. And so if price comes back here again, it's going to have a strong move most likely. And if it doesn't, price might go to the downside. So the safest area to put your stop loss, no matter what, is going to be below this level. Whether you enter a little bit more aggressive on the first play, a little bit safer on the third play, or the most second play, or the most conservative on the third play. The safest area to put your stop loss at these is always going to be at this level of support, below this level of support. Hands down, no ifs, ands, or buts about it. That's why it's an area of liquidity. Liquidity is just going to be where people are most likely going to put their stop losses. Very simple as that. Just think about it like that. If you were in a buy position, right over here, if you were in a buy position, where would you most likely put your stop loss in any of these places? Right over here. It's the safest place. Okay, so now, knowing that, if you're an SMC trader, you want liquidity to be rated. You want liquidity to be purged. And that's very simple, guys. It's just you're going to take the lowest point of this area where the safest place to put your stop loss is, right? The lowest point is over here with this candle wick. And you're just going to wait for price to tap into that area. Price touches it right over here. And then you're just going to look to take price long. And you'll see this is exactly what ends up happening, right? So all these people that were in support levels, that were in buys with their stop loss below the support level, if they hadn't taken profits yet, they just got stopped out. They all got stopped out. Liquidity has been took, and then price makes its move to the upside. This is what trading off liquidity means. You'll notice, guys, you might be thinking to yourself, well, this is still just an area of support, right? Still just an area of support over here. So you could just consider this an area of support and take a buy position. Yeah, you could. It's just different ways to think about the market, guys. That's why I coupled these into the same video. Whether you think about it in terms of liquidity, whether you think about it in terms of resistance or support, it doesn't matter. It's the same thing no matter what, right? Now, again, let's give you an example of it to the downside, okay? So we have this area of liquidity in the market, right? Why? Because if you're going to short, guys, where are you going to put your stop loss? If you're shorting over here, right over here. If you're shorting over here, right over here, right? Stop loss will always be above resistance. Why? Because if price goes above from resistance, what's going to end up happening? Chances are we go to the upside, we start going higher and higher and higher. Price is no longer caring about this resistance level. It's not going to go to the downside. So you should be out of the market because you thought price was going to go down. And now it's not. You should be out of the market. Okay. So this is what everybody that's shorting, their support, freaking heck. I keep on confusing the words. Their stop losses are going to be above the resistance level. Okay. So that's the safest area, right? Now, again, very easy to spot this in hindsight, but it's even easier in real time because if you see price like this and you're wondering where the liquidity level is, where it's very easy. It's going to be where the stop loss is the safest for shorts. The safest area to put your stop loss, if any of you are shorting over here, is not going to be over here. It's going to be above the resistance level, hands down. So it's actually very easy to spot this in real time. All right, just going to take a little bit of practice. But what we're waiting for as SMC traders is we're waiting for price to tap that liquidity. Now, how does it tap the liquidity? Right over here, right? And it taps the liquidity by going above it. So if you're looking for, there's two types of liquidity, guys. There's sell side and there's buy side. Okay. I'm pretty sure. Hold on, give me 1 second. This is buy side liquidity, and then the down version of this, so over here, the one we marked up before is going to be sell side liquidity. And the reason, and it seems kind of opposite, guys, but the reason why this top level is called buy side is because the buy stops over here. The reason why over here it's called the sell side is because the sell stops over here. Okay, and I might get, I'm pretty sure that I might have gotten them confused, guys. I don't really trade liquidity as much anymore. I never visioned it or thought about it as liquidity. I literally just took it as support and resistance, right? But anyways, right? Liquidity has been purged. We have gone above liquidity now, and then you just take a short after that, based on whatever confluences you've added. You don't just take a short based on liquidity, guys. You don't just take a short based on support and resistance. You have to add other confluences to it. You have to add other things to it. Okay, and we'll talk about, alhamdulillah, excuse me, what those other things are in the later video, like I said before, but you'll notice it works out. Like we can continue going to the downside and downside and downside. And like I said before, guys, we had this level of liquidity to the upside, liquidity that was took, and then we went to the upside. So very, very simple as that, guys, right? Now, again, guys, all of these concepts are just concepts, okay? Very easy to understand, very easy to spot. It just takes you practice. I'm going to take these off for a second, guys. Sorry, my contacts have not come in, unfortunately, but they're just concepts, guys, at the end of the day. So the more you practice these concepts, the more you go back in time on FX replay or on TradingView backtesting mode, right, in replay mode, and you just look at price do what it does, you'll see them happen over and over and over and over again. This is not just a one-off thing. This is not something that I made up either. It's been here, it's been in the markets for decades. It's going to stay in the markets for decades because this is just how the markets work. Open up a chart and just try to mark out support and resistance and see what happens in real time when you don't know what price is going to do. It's going to be a lot quicker and it's going to give you more experience. Hope this made sense to you guys. I've been talking for a very long time now. My throat hurts. If you guys like this video, like the video, comment down below, subscribe to the channel. More parts coming soon, inshallah, guys. Assalamu alaikum. Allah Hafiz.